The media narrative around AI is a mess. One day it's the strongest tech revolution in history, and the next it's a bubble about to burst. Here's the truth: you can't afford to ignore the AI revolution, and you absolutely can't afford to be reckless. Today I'm pulling back the curtain on my own portfolio strategy. I'm going to show you exactly how I'm benefiting from the AI revolution, and most importantly, how I'm protecting myself from a potential AI bubble burst using a simple, stable dividend strategy. So part 1, my core philosophy. I invest for long-term wealth and income, not quick wins. My strategy is simple. I want my money earning money for me through reliable dividends, smart buying and patience. Most of my portfolio is built around solid dividend paying companies, the kind that stay strong whether the AI is booming or busting. I focused on compounding my wealth through income first and growth second. That's the bedrock of my stability. Part 2, my portfolio structure. To manage risk and reward, I split my portfolio into 3 main parts. 1. The foundation. Healthcare, consumer staples, energy and banks. These sectors give my portfolio stability and regular dividend income. They're not exciting, but they keep the lights on and keep the cash flowing in. Number 2. Growth and innovation. I still want exposure to AI and tech, so I hold Microsoft, Dell, Nvidia and IBM. This gives me huge potential without betting everything in one speculative theme. When I chose my AI exposure, I'm not just chasing the hottest consumer trend. I look for companies so deeply integrated into the infrastructure of global business that they benefit from AI regardless of which startup wins. I call this my picks and shovels approach, and it's built on 4 giants. So Nvidia makes the chips, the essential computational power everybody needs. They are the picks and shovels of this AI gold rush. But because they can be volatile, I balance them with others. Microsoft isn't just ChatGPT, it's massive. Reoccurring revenue, cloud business, Azure is where companies run their AI models. IBM is also a dividend aristocrat focused on hybrid cloud and enterprise AI solutions, which are sticky and integrated into corporate back-end systems. Dell provides the hardware backbone, the servers and infrastructure. These 3, Microsoft, IBM and Dell, all offer wide moats and substantial business segments outside the AI hype, giving them a much wider margin of safety. This is how I captured the massive AI tailwind without putting all my eggs in one speculative basket. And number 3, my protection layer. A gold ETF and a bit of Bitcoin. They're my hedge against inflation, uncertainty and market panic. Together, these 3 layers give me a balance: income, growth and protection. So my stock selection process. To choose my stocks, I use a spreadsheet I built myself. It compares companies and tells me if they're undervalued and whether there is a margin of safety at the current price. That's how I make sure I'm buying quality companies at fair prices, not chasing hype. If the spreadsheet says the stock is overpriced, I move on. If it's undervalued, that's where my next dollar goes. I invest a fixed amount every month. That's called dollar cost averaging. It keeps me consistent and takes the emotion out of the game. When one stock or sector runs too hot, I simply funnel new money into the others until things even out again. That way, I'm always buying what's lagging, not what's overhyped. I don't keep cash sitting around. My monthly contributions are my cash flow, and over time, that steady investing rhythm compounds beautifully. So the big picture, if the AI bubble bursts tomorrow, I'm okay, because my portfolio isn't built on hype. It's built on fundamentals. I still collect my dividends, reinvest at lower prices, and use every dip as an opportunity to buy more quality stocks. That's how I'm protecting my portfolio from the AI bubble and building long-term wealth 1 month at a time. Now, if you want to see this strategy in action, here's how you can stay connected. Subscribe right now, hit that button to get my monthly portfolio updates where I show real world results of this exact dividend strategy, including every buy and sell. If you're new to investing, check out my beginner series, and you can also join the community over on my Facebook page, The Dividend Dad. All the links are in the description. Finally, if you want a full in-depth look of how this strategy works under pressure, watch this video now, or it might be there, I don't know, of my latest quarterly portfolio health check. It shows you exactly how this strategy works in real life. I'll see you there.